fuck it, there is no other asset that matters. This is the greatest macro opportunity of all time. So why even focus on anything else? Most people, I can see it already scared of the down cycle to come because they've all got PTSD of the last one. But if you want to go to the OGs of this space, the Dan Moorheads, the Wences Caceres, all of these guys, they didn't give a fuck. They just rode it and added into the down cycles, and they've compounded massive wealth.
Raoul Pal begins by highlighting the astonishing growth in the number of active crypto wallets, which stands at around 550 million. This number is increasing at a rate that surpasses even the adoption speed of the internet. Such rapid growth is unheard of for any asset class or technology, and it underscores the massive potential of cryptocurrencies. Pal compares this growth to the proliferation of AI technologies, which, while widespread, are not assets in themselves. Cryptocurrencies, on the other hand, are both a technology and an asset class, making their adoption even more significant. If this trend continues, Pal predicts that by the end of 2025, there could be 1 billion crypto users, and by 2030, this number might swell to 4 billion, encompassing half the global population.
There's about 520 or 550 million wallets, active wallets out there. It's growing at twice the speed of the internet. So this is the fastest adoption of any asset class or technology the world has ever seen. Technology side's just been beaten by AI, just because Microsoft and other things can install it everywhere instantly. But it's massive because it is an asset and AI is not an asset. So if you just extrapolate that chart, you get to 1 billion users by the end of 2025 and 4 billion by the end of 2030. Okay, that's half the world. Okay, so what does that mean? Well, you can also take the log chart of Bitcoin and just extrapolate out into the future, and you can see the trend rate of growth, the exponential trend over time. So it gets to somewhere like $1 million, and what happens is the space goes from 2.5 trillion, where it is today, to, let's say at the end of this cycle, 10 trillion, maybe 12, maybe 15, depending what the cycle's like, and then on to 100 trillion, which is the size of most of the other asset classes like equities. In fact, most of them are larger than that. So that movement from 2.5 trillion to 10 trillion to 100 trillion is the trade. And that also happens to be the fastest, largest accumulation of wealth the world has ever seen. Nobody's ever seen anything like this before. It's an equivalence to the entire baby boom generation entering into financialization, buying stocks and stuff like that, plus the opening of China to the WTO, plus the Iron Curtain coming down in Russia. It's of that magnitude of wealth generation in one short period. To put it in perspective, at $100 trillion, the S&P 500 has taken 100 years to accumulate $50 trillion of value. 100 years, and we will do it in less than 20. People lose the wood through the trees in this space, right? It's so easy to get caught up in the drama, the volatility, the down cycles that make everybody feel like shit, then the glory times. You forget what's actually happening. And, kind of in the end, every single, major crypto position you've ever sold, you regret when you look back. Because if you divide any asset by crypto, any single asset on earth, they all go down in price versus owning Bitcoin, or you choose your asset, right? And it's like, once you realize that, it's really difficult to get that out of your head. And so it, to me, became a realization over time from about 2020 onwards that there was no point doing anything else. Even though I'm a true macro guy and I used to do absolutely everything else, I now observe what the dollar's doing and stuff like that, but only within the context of where it's going with crypto. And many greats of the industry have gone down the same journey. Many of them were Global Macro Investor subscribers, Dan Tapiero, Mark Yusko, a whole bunch of these people, Alan Howard. They've all gone down this path of, fuck it, there is no other asset that matters. This is the greatest macro opportunity of all time. So why even focus on anything else? It takes a while for people to get this. And what I keep trying to do is get people to say, okay, I love gold right now. Okay, great. Divide it by the Bitcoin chart. I love oil right now. Great, divide it by the Bitcoin chart. And our job really is to maximize our returns. We're trying to look after our future selves here. So as an investor, you've got to take the optimal asset. Now, everything is correlated. Even crypto is part of the same cycle as technology stocks. Most equity markets, commodity markets are just lagging. It's all the same bloody cycle. So you only need to choose one asset. Everything else is just suboptimal returns. Most people, I can see it already scared of the down cycle to come because they've all got PTSD of the last one. But if you want to go to the OGs of this space, the Dan Moorheads, the Wences Caceres, all of these guys, they didn't give a fuck. They just rode it and added into the down cycles, and they've compounded massive wealth. And there's many people who are not public who've done the same. But most people fear the downside more than thinking about its opportunity. Even though it never feels great, I was excited about it in 2022 because it meant I could add to my positions at great levels and compound. So then you get back to an all-time high much sooner than everybody else who's just done nothing. So that's really interesting. And so time horizon is super important. If you just don't want to deal with the downside because your psychology doesn't allow you to do it, that's fine. You need to really think that thing through. Now, what happens is people lose their fucking minds in a bull market and in a bear market. In a bear market, they get rid of all their tokens. They say, never again, this is the worst thing I've ever done. And in a bull market, they end up buying too much shit, stupid shit. And really, to not fuck up the movement from 2.5 trillion to 10 trillion to 100 trillion is to own the highest quality assets and do nothing. Now, we all have an inner degen somewhere within us. So allow yourself a bit of space to do that. I've got positions in dog whiff, hat and bonk and, you name it. But when I look back in my portfolio, it's probably 1%. But I look at it on the screen all day. I'm checking the whiff price all day. It's ridiculous. It's 1% because the rest is just a buy and hold long-term position. And then I see a lot of people trying to be overly cute by saying, oh, I'm going to own this underappreciated crypto like Cardano or XRP or whatever. Fine. But you're taking a risk that they're not going to appreciate the same as the proven assets. Now, the proven assets keep trending. If I look at the compound rate of growth, the annualized rate of growth, Bitcoin's 150%, ETH since 2012, ETH is 180, about 160, 70%, something like that, since 2015, 16. And that's per year. I mean, this is bananas returns. And then Solana's like 200. And that was a snapshot in February before. I mean, many of these aren't at all-time highs yet. So the returns from just owning the top assets is so good.
Pal emphasizes the importance of Bitcoin in this scenario. By extrapolating the current trend rates, he suggests that Bitcoin's price could reach around $1 million in the future. This projection is based on the historical exponential growth of Bitcoin, which has shown a consistent upward trajectory despite its volatility. Pal compares this potential wealth generation to historical events like the financialization wave during the baby boom generation, China's entry into the World Trade Organization, and the fall of the Iron Curtain in Russia. However, he argues that the crypto revolution could surpass these events in terms of the speed and scale of wealth creation. Pal acknowledges the high volatility in the crypto market, which can make investors feel uneasy during down cycles. However, he notes that historically, those who have held on to their crypto assets through these cycles have seen massive returns. Dividing any asset's performance by Bitcoin's performance consistently shows that traditional assets decrease in value compared to holding Bitcoin.
Now, I also understand that a lot of people may only have 10 grand worth of savings. So they think, well, even if Bitcoin goes to $1 million, that's a 14x. So I've got 140 grand. Can that even get me a deposit on a house? Is that a retirement saving? I get it. So people really want to take more risk, but just do it intelligently. And that's how not to fuck this up. Because if you turn your 10 grand into zero and you do it every crypto cycle, which many, many, many people did, The NFT cycle destroyed a lot of people, and a lot of people got destroyed in just all of the kind of super early stage speculative stuff. We've all got wallets of shame, so it's not like any of us are any better. We all have the wallet of shame. And don't use leverage is the other one. That's the other thing that people tend to do is they love getting a yield. I don't see the point. So yields have risk. They come with a risk. Even staking yields, it often means if you're not liquid staking, you've locked it up. If it's liquid staking, there's the risk of the platform, of Lido or whoever else going under, or something happening, right? Something unexpected. And in crypto, something unexpected always happens. Having leverage on a 70% volatility asset class is a very, very dangerous thing. Most likely, you will lose control of your coins. Your one job is not to lose control of your coins. That's why storage is super important. Your one job is not let go of your coins. Keep it for that 5 or 10 year bet, and your future self will thank you forever for doing it. Look, why are we all in this game? Why are we all investing? Why are we not sleeping at night in the bear markets or the bull markets? In fact, we never sleep. Why are we all completely exhausted? It's because this is the opportunity and we all know it. And so why are we doing that? It's really for lifestyle. It's our future lifestyle or our present lifestyle. Because if not, that's a weird thing to do to yourself, the amount of pain you have to take to do this. So normally it's for lifestyle. So what people regret is saying, I could have paid off my house last cycle, but I didn't. Now, I also get that you don't want to take all of your chips off the table, your tokens. So have goals that are achievable lifestyle-wise, that you may end up parting with 50%. If it makes a big difference to your life, that's a bank. Your lifestyle is the bank.
One of Pal's key pieces of advice is to focus on high-quality assets. He suggests that while it's tempting to diversify into various lesser-known cryptocurrencies, the proven top assets like Bitcoin and Ethereum offer the best returns. He points out that Bitcoin has shown an annualized growth rate of 150%, and Ethereum around 160–170% since their respective inceptions. Such returns are exceptional and underscore the strength of sticking with the top-tier cryptocurrencies. Investors often make mistakes by selling their assets during bear markets out of fear or by buying low-quality assets during bull markets due to hype. Pal recommends maintaining a disciplined approach, holding on to high-quality assets and avoiding overtrading. He acknowledges the human tendency to want to engage in riskier investments, but stresses that such activities should only constitute a small portion of one's portfolio. Pal emphasizes that the purpose of investing in cryptocurrencies, or any asset, is to improve one's lifestyle. It's crucial to have realistic goals and to take profits when they can significantly impact your life. He advises against holding onto every asset indefinitely out of fear of missing out on future gains. Instead, make informed decisions that align with your personal financial goals and needs. Please like and subscribe my channel.